And it's a beautiful Friday morning right here in Lagos, Nigeria. Good morning, good evening, wherever in the world you're watching from. It's Business Morning live on Channels Television. I'm Ladi Williams. First off, let's take a look at what's happening with oil prices. We see prices extended losses in early trade today. We headed for a weekly fall as the prospect of extra supply from Iran returning to the market outweighed fears of a possible supply disruption rising from a Russian invasion of Ukraine. Brent crude futures fell 47 cents to $92.50 a barrel, extending a 1.9% drop from the previous session, while U.S. West Texas Intermediate crude futures shed about 62 cents to $91.14 a barrel after sliding 2% in the previous session. Still see both benchmarks above $90. The contracts hit their highest level since September 2014 on Monday, but we're headed for their first weekly fall in 9 weeks amid reports of a deal taking shape to revive Iran's 2015 nuclear agreement with world powers. And back here, Nigeria's gross domestic product grew by 3.9% in the fourth quarter of 2021, sustaining a positive trajectory according to the National Bureau of Statistics. The Statistician General of the Federation, Mr. Simon Harry, who was speaking at a news conference in Abuja, explains that the annual GDP growth rate stood at 3.4%, while aggregate GDP came to 49.2 trillion naira, compared to the 43.2 trillion naira gained in the fourth quarter of 2020. Fastest growing sectors during the fourth quarter, according to the NBS, includes transportation, coal mining, and the metal subsectors. Do take a listen.
For the second time this week, the Statistician General of the Federation is leading top officials of the National Bureau of Statistics to brief journalists on how the nation's gross domestic product fared in the fourth quarter of 2021. The GDP, according to the Bureau, grew by 3.9%, slowing from a growth of 4.03% in the third quarter. This follows a gradual recovery after the adverse effects of COVID-19 on the economy.
In the last 5 quarters, the steady progress made in stemming the COVID-19 pandemic and the associated negative impact on the livelihood, the well-being, and the economy generally. Globally, many countries have witnessed an improvement in economic performances compared to 2022, when COVID-19 was so endemic. And thus, economic recovery is a gradual process that requires consistent collective efforts to improve economic activities across the institutional sectors, such as the household, the non-profit institutions serving households, the financial corporations, the non-financial corporations, and the government.
And then he briefs on sector-by-sector contribution to the GDP rate. The oil sector, for instance, contributed 5.2% in the fourth quarter. The non-oil sector, on the other hand, recorded a growth rate of 4.7% in terms, showing an improvement of 1.6% recorded in the fourth quarter of 2020. The fastest growing sectors for the fourth quarter include transportation and storage, mining and quarry, financial and insurance sector. The agri sector, on the other hand, grew by 3.5%, showing an improvement compared to the 3.4% recorded in the fourth quarter of 2020, thanks to the government's intervention in the agricultural sector.
Also, while air, rail, road transport witnessed high demand during the fourth quarter of 2021 due to the festive season and indeed easing of travel restrictions, the growth of financial institutions was driven principally by the volume of deposits and interest in deposits received. In addition, there was an improvement in water supply, sewage, waste management, and remediation during the quarter under review. On the other hand, the poor performance of the oil was due to operational challenges and indeed insecurity coming from pipeline vandalism.
With this positive outlook, more economic recovery is expected for the first quarter of 2022 and later in the year as the government looks at how to fund sectors that will drive the much-needed growth.
And for analysis now, we have Temitope Omoshi, investment strategist, AfriInvest Asset Management. Great to have you on the program. Good morning.
Good morning. Thank you, Ladi.
Yeah, so quite impressive growth numbers we see there. Seems to have beat some expectations, even that of the IMF and Bloomberg consensus. What are your thoughts on this?
That's quite interesting, actually, to see that, Nigeria economy grew by 3.4% in 2021, and it was as a result of the significant growth we saw in the fourth quarter. Growth was about 3.98%. That's quite commendable, actually, because, like you said, it exceeded a number of analyst expectations, the IMF and the World Bank, and one could actually allude the performance to what we saw in the telecommunications space, especially. In addition to that, we could also look at support from the government. We shouldn't deny the fact that, during the COVID-19, government supported the economy a lot. And one thing with economic policy is that there's a lag effect. There's what we call impact lag and response lag. That is when government responds to an economy and when the impact is felt by the people. Because most times people will say, oh, government said they have spent so amount of money, but we are not seeing the impact. In fact, we are not even seeing the, numbers improving. So that could also be the impact of what we are currently seeing. And again, I think it's also very important to note that according to what, the NBS said as well, this is the fastest growth since 2015 when the economy grew by 2.8%. I think that's quite applaudable. But I think a concern for me, or another question would be that as Nigeria economic growth now back, is the economy back to pre-pandemic levels? Or can we say that the output gap that was created during economic recession has been properly filled? So what I mean by output gap is, when there's a kind of shock in an economy, it creates what we call negative output gap. So a negative output gap is when an economy is performing below the potential. That is, potential is up, actual is below. So at that point, it results to high unemployment and other negative impact of, when you have that kind of poor output gap. So, but a bit of analysis actually explains a lot about Nigeria's output gap. So, for instance, in the last 10 years, Nigeria average growth is about 2.6%, right? So, if you assume that there was no COVID-19 in 2020, the impact did not affect the economy. So, you would say that the economy was expected to grow by 2.6% or 2.5% on the average.
Because some say it's, because of the base year effect.
Yes, the base year effect also contributed. But when you look at that, I'm even talking from the angle of if we are fully recovered and if we have recovered the gains that, that we lost in 2020 now. So if you look at that, currently, the real GDP should be at about 75 trillion naira, and what we have is about 72. Fine, base effects supported the performance we saw, and quite applaudable. In fact, we should be looking at about 6-7% GDP growth, because this performance is not an outlier. If you agree with me, because the US, Europe and a number of advanced economies, even some emerging markets, recorded their best growth ever this year because of, what you just mentioned now, the base effect. It was just like a cheap performance, like you have been given extra mark. Like you got extra mark, 30 mark, and, it's very easy to have 80, 90, 100%. So that was what COVID-19 did to every economy in 2020 and what is currently doing to the economy.
It's not time to be excited.
No, like I said, I said the output gap is still quite wide. The negative output gap is about 3 trillion. So, in fact, the government is still needed to support the economy. I know that we've seen a number of support in recent times from the Central Bank of Nigeria and from the Fiscal Authority, but there's still output gap because unemployment is still quite high, although we know we don't have recent figures. But if you tell people on the street that, your economy is growing by 3%, they wonder that, what, we are not seeing the impact on inflation. They cannot even feel this. It's because we are not growing at that potential. For instance, if someone may ask you that, what's the optimal growth? What should we be looking at? You should cast our mind back to between 2010 to 2015. So, because at that level, unemployment was below 10%. So growth rate at that period could actually give you a sense of how Nigeria economy should be growing. So those periods we had about average growth of 6%. So if you want an inclusive growth is, a kind of growth that creates jobs, because growth is just a number. What people want is an inclusive one that can affect welfare. People have jobs and welfare improves. So we could also look at the sectoral performance as well, although that is a bit interesting because you observe that about 13 sectors actually improved compared to by 5 that declined.
Before we go there now, can this growth be sustained, going forward?
Well, I think it can actually, but it's a tall order. because, like I said, base effect supported what we saw in 2021. To have a very high growth, or even at least 3% in 2022, is going to require significant amount of fiscal and monetary policy support. Because the economy lost 1.9% in 2020, and it gained 3.4%. So if you are to discount 1.9 that was lost, you have barely up to 2% growth. So, in fact, it has even raised the bar. 2021 has raised the bar. So if you want to exceed what you have in 2021, you have to grow faster, which means there has to be concerted effort by government, monetary, and fiscal authority to ensure that, real sectors of the economy is supported through, addressing problems around ease of doing business, policy uncertainty, and a number of other issues that the manufacturing sector and other important sectors of the economy are grappling with.
Right. And talking about inflation, I saw a very interesting question recently. Somebody asked, is inflation too big for the MPC to solve?
Not too big, because when you look at factors that drive inflation, you cannot actually absolve the central bank or the monetary policy authority from what is currently affecting inflation. 3 factors are majorly affecting inflation in Nigeria. You look at the money supply. You also look at structural factors that is outside the CBN purview. And, you also look at other factors, basically. But those are the 3, and importantly, exchange rate I need to mention. Money supply, structural factors, and exchange rate. Exchange rate and money supply are within the purview of the central bank. Why the structural factors, for instance, what we saw in 2019, August, when the border was closed, was a directive from the fiscal side. But what we saw in 2020, when multiple exchange rate was created, was the CBN. Increase in money supply, ways and means advanced to the government is from the CBN. So, as much as most times you always look at inflation as if, it's cost push and it's outside the purview of the central bank. No, central bank and the Monetary Policy Authority even have a lot to do in the equation of inflation trajectory in Nigeria. So it's not actually outside the purview of the monetary policy.
What about inflation from, global economies? That also, transcends into this emerging economies.
You mean Nigeria, right?
Yes, like Nigeria.
So, yes, when you look at the substance, which is why the exchange rate factor comes into play. However, I always emphasize that when you analyze Nigeria's inflation, sometimes it's not just about the exchange rate, right? Which now reduces the impact of, what is happening globally on Nigeria's inflation. Because look at inflation, Nigeria inflation basket, the CPI basket, 60% is just imported food inflation. 52% is local food inflation, which is why if you do a kind of correlation analysis, look at exchange rate and inflation in Nigeria, you will see that you won't find sufficient, correlation compared to, you look at August 2019, we had a kind of shock, border closure. Something happened, there was EndSARS protest in October, of 2020, restriction to COVID-19 in March. You will see that there were jumps in these periods, and these periods could not be linked to a major devaluation of the currency. So what I'm saying in essence is that though we would consider what is happening globally, but the most driver of Nigeria's inflation is largely within the economy, cost push, and some kind of policy uncertainties around, the two policymakers in the country.
It's more within. Okay, let's look at contributors now. Sector. I see transport was the most impressive. What do you think drove that?
Well, transport sector, I think that is quite impressive. And when you look at what is currently happening in Lagos to the rail transport, a lot of people have started picking interest in it. In fact, I think about a month ago, I did an analysis of rail transport, the revenue. It increased by 3 times. Because a lot of people found it very, very convenient, and I'm sure you must have had positive comments. The rail transport from Lagos to Ibadan, a lot of people are using it now. So I think that also contributed to what we saw in transport. In addition to the aviation sector, one of the hardest hit sector during the COVID-19 was the aviation sector, because people could not move out of the country. They couldn't move into the country, and restrictions to COVID-19. But because, a number of countries have now relaxed some of those restrictions, I think that also affected what we saw in the transport sector. So altogether, I think the transport sector is actually coming out from the waters.
And also we have the wholesale and retail trade sector. Despite this recovery, we're still seeing structural challenges there, but it's quite an impressive move there.
Yeah, actually very interesting. I think, the dynamics of the Nigeria economy and the global economy is changing. In the light of what you just said, they are now more flexible, wholesale and the wholesale and retailers, because they leverage telecommunication technology. You know, before now, you have to go to a physical market, but with social media, on Twitter and a number of other platforms, they can market their products, they can connect customers, so there are no limitations. Even despite the restriction we saw in 2020, they still did a bit better. And, you know, they've actually created a kind of resilient and means challenges, so, which is why we saw that positive numbers.
Now, you did mention telecoms, but telecoms didn't do well.
Well, didn't do well, but it actually grew by about 6%. And in fact, we should hinge most of the growth we've seen other sectors of the economy to telecommunication sector. In fact, interestingly, before 2022, or let me say before 2010 to be precise, right. You know, there was a major kind of revolution in the telecommunication space. We saw in 1997 to 1999, we saw deregulation of the telecommunication space, right? After that period, telecommunication only contributed less than 5% to the economy, but currently it contributes about 14%. In fact, during COVID-19, the sector grew very well, like performed positively well. And if you look at the numbers of even telecommunication companies, from the MTN to Airtel, the profitability grew by over 40%. So telecommunication grew by 6%, so that's still quite impressive compared to even the overall growth. So I think the telecommunication is strong and is supporting other areas of the economy that, you know, that needs to be resilient.
Quite interesting. But, you know, let's go back to inflation. Now, do you think, you know, a single-digit inflation is realistic, let's say, in the next 2 to 3 years?
Well, nothing is unrealistic if you have the right policies. For instance, it's already predicted that this year, inflation will average about 13% if there are no major shocks in the economy. With the right policy, like I said, addressing the component of inflation, we talk about food. You know, food alone accounts for 52% of inflation in Nigeria. In terms of even consumption spending, it accounts for close to 56%. So if we're able to address, you know, challenges to food, you know, food supply, I think we, you know, a single digit is not, possible, so it's not far-fetched.
All right, so looking at the economy now, what's your outlook for 2022?
So looking at the economy here, that's quite interesting. So we're looking at about 2.5% to 2.7% growth this year.
And considering election years next year?
Yes. Yeah. Investors are very wise, intelligent. They must have priced whatever will happen in the Nigeria economy into their investment, you know, plans. In fact, when you look at Nigeria's capital importation, you observe that foreign investors are not coming in as such, and the ones that want to exit the economy must have done that. So the ones that we have here are committed to the economy. So we won't see major shock on, you know, the economy that would really affect GDP negatively. In fact, you know, Nigeria's economy, in terms of the GDP, consumption spending is about 60%. So it is just very important for us to continue to enhance consumption, I think, which is why government is always after, you know, the social programs so as to ensure that people have money to spend. It's not just about foreign investors. In fact, investors are now very apprehensive globally because of so many uncertainties. You see what is currently happening between Ukraine and Russia, and U.S. policy uncertainties as well. Inflation is eating the roof. So everybody is, you know, quite confused. Investors are even sitting on the, you know, on the sideline. So for the Nigerian economy, with the base factor, what is currently driving the economy is even the non-oil sectors. So, you know, in a way, we are even immune to some of the oil price shock. We're not even benefiting from what is currently happening in the global rally. Yeah. So we are not benefiting from it. If you look at the non-oil sector, it grew by 4%, while oil sector went down by about 8%. So it tells you that the structure of the economy is changing, although we want a balanced growth. A balanced growth is where you have both non-oil sector and oil sector contributing significantly to the economy. So basically, I think with just no more activities, we should be able to have up to 2.7% growth this year.
All right. But how do you see, you know, investors in the capital market reacting to these figures?
Well, investors will look at sectors. You know, I mentioned the importance of telecommunication sector. They will look at transport sector. So recently, we've seen the importance of telecommunication sector in the Nigerian market. from the MTN and Airtel, and a lot of investors are even upbeat when it comes to their valuation. So they will continue to look at sectors, these sectors, in addition to the industrial sector, particularly the Dangote cement, the Boat cement, because once there's increase in fiscal policy, once government has proposed that there's going to be more spending on capital projects, you know that government will definitely demand cement. And what happens? There's going to be interest in Dangote cement, Boa Cement, and WAPCO. So they will just look at the GDP numbers and look at sectors that grew the most. That could also shape their opinion as to which sector to put their money in 2022. And
they also have to consider, the risk of rate hikes,
Yes, but one thing with Nigeria, like I said, is actually peculiar. Okay. Our case is peculiar. Yeah. A number of persons or analysts would have told you that maybe when rates is increased in the US and other advanced economy, could lead to capital outflow. But like I told you earlier, the level of capital we have in Nigeria now, they are already locked in the economy. The only thing is that we won't have much of the inflows. Okay. And the kind of inflation we're looking at in Nigeria is going to be on a decelerating mode. So the CBN will not be under, pressure to increase rates.
Right. All right. We'll keep watching you, see how the MPC plans to handle all of this. All right. Temitope Omoshi, investment strategist, AfriInvest Asset Management. It was great having you today.
Thank you so much.
All right, so after the break, we look at Nigeria's gift card industry. That's our next conversation. Do stay with us. This is Business Morning. All right, now to our next conversation. We see Nigeria's gift card market, which includes iTunes gift card, Amazon gift card, Google Play Store gift cards, and a couple of others. We see data published by a Dublin-based research and markets, a research market firm shows that the gift card market in Nigeria grew by 16.7% from $1.4 billion in 2021 to about $1.2 billion in 2020. That's a move up there. And expected to grow by about 21.4% to reach $1.7 billion in 2022. Quite an interesting movement there. But we have Tolu Lawal, Creative Director, Hardcore Digital Consultants, right here to break this down for us. Good morning. Great to have you.
Thank you very much. Thanks for having me.
Yeah, so first of all, how does this, gift card market actually work?
Yeah, so gift card is essentially an alternate method of payment. It's literally a new method of payment where you can purchase products and services from businesses. It's also used as a product growth strategy for businesses to increase sales, build awareness, and essentially drive new consumer conversion. So basically, as the report said, the growth of the gift card market in Nigeria right now grew by 16.7%. So we're looking at a growth of 1.2 to 1.4. And in 2022, we're looking at 1.7 billion. So it really just goes to show the impact and the exponential growth that this gift card market is currently having in Nigeria.
Yeah, quite an incredible growth. But where's the demand coming from?
The demand really is, I would put that on the COVID-19 pandemic period. Essentially, what COVID did was it limited physical interactions across the world and also in Nigeria. So with limited physical interaction, it meant there was more being done online. There was more shopping being done online. People were less likely to actually go to their favorite stores to purchase, and were more likely to use gift card. Then when you're trading, when you're giving friends or families a token of appreciation, as opposed to the usual physical gifts, people are now adopting the usage of gift cards. Yeah,
quite interesting. But these gift cards are mostly international cards, so that means you have to buy them with USD. Yeah, that translates to importation.
Definitely, yes, it is. Most of these gift cards are actually international gift cards, such as iTunes gift card. The mostly adopted ones are the iTunes gift card, the Google Play gift card, the Steam gift cards, and the Amazon gift cards. And these are all international gift cards. So yes, you're right.
So that's not good. That's taking most of the dollars out of the country.
Yeah.
So how does it work for you? Don't we have Nigerian, gift cards?
Yeah, we actually do have Nigerian gift cards. Okay. So at the end of the day, it's a growth in adoption. At the end of the day, the craze came from the international scene, and now Nigerian brands are beginning to adopt it. And even in our product growth strategy, we make it paramount that we also adopt such strategies, because the gift card really is a way of adopting new consumers. So people are storing their money in a gift card for future use, and that way you know that you are most likely able to tie consumers down with finances in your business, in your organization. So it's a great product strategy that Nigerian brands are beginning to imbibe, and yeah.
So that keeps that practically helps keeps customers within your framework, the framework of your business.
Exactly. So they don't take the money out.
Okay. So how does this add value, to the Nigerian economy?
Essentially, you have people from the international scene bringing in gift cards to the Nigerian scene, which also serves as I'll call it a capital investment for the Nigerian economy, for the Nigerian scene. So yeah, this is very valuable to us.
And another interesting thing, I hear people trade them.
Yes.
How does trading work, with gift cards?
Well, they can be traded to Bitcoin or cash using peer-to-peer platforms. So this is once again, with each phase comes a new development, and these new developments are being adopted across the world. So new developments have seen that gift cards can be traded into cryptocurrency or cash using peer-to-peer platforms.
Yeah, because I get a lot of adverts, saying buy your gift card, buy this, sell it, and but what are the risks? Is there a possibility of being scammed with these cards?
Yeah, well, for every new development comes a risk, so it is understandable. Or every decision, every move, every development, every product has its merits and demerits, and that's just not different from gift cards.
Yeah, and most people that deal with gift cards somehow also deal with cryptocurrencies. Is there any relationship there?
Well, the relationship, once again, is now with development and growth, it's a lot easier to convert your gift card into cryptocurrency. And with ease comes adoption. So when you give people ease, then you're giving them access. So there's just more access and ease, and that is what we see now with the growth in the union of gift card and cryptocurrency.
All right, so you spoke about gift cards being used to increase sales earlier. What other strategies can you recommend, to brands to actually push sales and retain customers?
Oh, thank you very much. Michael Brenner, who is the CEO of a leading content marketing firm, once said that content marketing is essentially the what bridges the gap between what the brands want, what the brands have to offer, and what the consumers want. And I really feel like in product growth, there's an underrated strategy, which is content marketing, and which is now there are more eyes on it. The world is understanding that, okay, with more investment in content marketing, you can save from exorbitant investment in promotions and the likes. So there's a whole lot of strategy. If I start now, we're going into like 30 to 40 to 50. Yeah. But essentially, we have the use of paid advertising. We have the use of digital banners. We have the use of several mechanics. Right. But the ones that I personally feel are underrated right now is content marketing, and I feel like there's so much, especially in the social media scene. In Nigeria, we have a population of 200 million. We have about 100 internet users. These are facts from January 2021. And we have about 33 million social media users. So you're looking at a 20%, I'd say 16 to 20% of the population being housed on social media. And it's just like a faster means to onboard these consumers, potential consumers, if I put it that way. Right. So yeah, a product growth strategy that I believe is underrated right now is content marketing. A lot of brands are beginning to be involved in it, which is creating content that is actually that is relatable and shareable to the average consumer and ties directly to the products that you have to offer. So these are the product growth strategies that I personally am interested in seeing how brands utilize it, and I'm also very much interested in utilizing it for a lot of my clients.
Quite interesting. But how do you see this sector growing? From 2022, next 5 years. Are there any, investment opportunities that one can actually position, early, before it becomes big?
Of course. Right now, we have independent bodies who are content creators in the social media scene and outside of the social media scene. So what used to be the traditional TV commercial before is now being adopted into 30 seconds social media content. Things that used to brands that used to invest millions into TV commercials that would last for 5 minutes, 4 minutes, 3 minutes now can use not even up to quarter of that budget to invest in social media visual content that would give, if not the same return or barely close to the same leads generation of the previous investment. So the independent bodies have realized this, and they are beginning to become leaders in this front, which is in creating content. And I also see a potential for brands to also have in-house content creation teams, content creation platforms that can actually foster the growth of content creation, using to onboard consumers, using to engage consumers, and using to drive leads. Because at the end of the day, content is fire, social media is gasoline.
Quite interesting. Now, talking about social media, so many platforms now. And one that's caught my attention is TikTok. A lot of people are using TikTok for all those short videos. And how's that working for?
Well, TikTok is really, I would say, is a ticking time bomb, and in a positive way. One of the leading TikTokers, Maiwa Sonariwo, you should actually see the kind of content that these people actually put out. It's engaging content that actually drives shareability on social media, whereby people actually engage with this content that drives promotions for brands. So while you see these people who have the audience, they have the numbers, and they have the skill. So all brands need to do is tap into their audience, their skill, and their numbers, and they'll be able to promote the brand's objectives to their consumers. TikTok is a really great platform. I see so much potential, especially in 2022, on the platform.
And I hear, most people that sell on these social media platforms, they talk about, obviously, with Twitter being on ban recently, they're back now.
Yeah.
Is Twitter still working for them?
Yeah. At the end of the day, I feel like it's a case of adaptation. So when Twitter got banned, a lot of content creators adapted to the other existing social media platforms. And now that it is back, you see a lot of them going back, onboarding and continuing the campaigns, continuing the creative content they dish out, continuing the amazing insights that we benefit from Twitter. So now that it's back, I look forward to executing, really innovative campaigns on these social media networks.
Quite interesting. Well, I'll see if I'll get on board in this.
You definitely should.
Quite an interesting industry there. All right, Tolu Lawal, Creative Director, Hardcore Digital Consultant. It was great having you.
Thank you very much.
And enjoy the rest of your day. All right, now we'll take a moment now. When we come back, Business Morning continues. Just stay with us. All right, welcome back. Let's take a look at what's happening with the markets with Niete. Well, Niete, it seems a lot is happening with the fixed income market.
Yes, good morning, Ladi. It seems as if the fixed income market is gradually getting its bounce back, because at the bond segment as well as the treasury bill segment, it's mostly bullish sentiments within this week. So I think we'll get analysts to talk to us about it. But before that, this is how it turned out. Bullish sentiments, like I said, average yield there contracted to about 11.3%. Total number of deals that we had there was 12. So now to tell us more about this bullish sentiment, let's talk to Ifeoma Onyejekwe, who is a fixed income dealer at UBA. Thank you for joining us, Ifeoma.
Thank you, Anita, for having me.
So far this week, it looks as if we've been having activity at the fixed income market becoming more vibrant. So can you tell us what's driving these sentiments, particularly when you have the DMO's bond auction for January being oversubscribed and oversold?
Yes, I agree with you when you said that the fixed income market is gradually starting to have its bounce back, and that is mainly because of liquidity. So at the beginning of the week, there was 135.9 billion of OMO maturities, which came in on Tuesday. So that was what propelled activities in the fixed income space. We saw lots of traders have special demand for CBN special bills. And then on Wednesday was the bond auction, which, like you rightly said, was very oversubscribed. 150 billion was offered, split into 75 billion each of the 2026 and 2042 bonds. And then we saw that the DMO sold 297 for competitive, and then non-competitive was 418, which was a total of 415 billion compared to 150 billion offers, which is like close to 3 times of the offer level. So yeah, and also that demand in the primary market also spilled into the secondary market. Even before the bond auction, we've seen lots of demand for the 2026 bond, mainly because of the shorter duration. So there has been a lot of interest on that bond. As traders use it to manage their risk position, so it's going to give you good yield as well as manage your risk in case of yields or interest move against you.
Okay, so with that being said, what should we expect from the market this week? Do we still see this bullish sentiment taking on to next week?
Yeah, next week is going to be much more demand, much more bullish sentiment. We're expecting FAC allocation payments. They will start their meeting on Monday. And we also expect about 345 billion of T-bills maturities, 115 for the NCB and 230 for OMO. And also, we're expecting 59.55 billion of bond coupon payments. So you can see with this much liquidity in the market, we expect reactions left and right here and there. We expect the market to be very active next week.
Okay, so thank you for that analysis, Ifeoma. Yeah, that's Ifeoma Onyejekwe, fixed income dealer at UBA. So now, from there, we flip over to the equities market. 4 billion naira was lost at the close of Thursday's trading session. This is how the market turned on the all-share index, while the equities cap was down, well, like I said, 4 billion naira. And no thanks to Seplat. Seplat, it's overshadowed the gains recorded from GTCO's share price as well as Lafarge. So in terms of sectoral performance, it's kind of a mixed picture. Like I also mentioned earlier, 3.80% is what the oil and gas sector printed in loss at the close of Thursday's trading session. So that shows you that Seplat had much more of an overwhelming presence on the market's performance. Then in terms of activity, it's mostly in the red. Volume was up. Volume was up by about 12.4%. In terms of value, it was down by 21.58%, while the number of deals was down by 14.34%. That's 4,251 deals carried out yesterday. Then in terms of the unlisted securities market, still in the red. Of course, that color is not there, but it's a minus. So
all right,
that's it.
All right, Nathan. Well, it seems the equities market is, this week has not really been the best, but I'll be waiting to see how the weekly performance numbers show. All right, Nathan, thank you so much. Pleasure. Okay, so after the break, we head on to London. That's in a moment. Just stay with us. All right, now let's take a look at what's happening in the UK. We see data out today from the Office of National Statistics show retail sales rebounded in January. Let's hear more now from Juliana right there in the UK. Good morning and great to have you, Juliana. So it's a recovery from a 4.0% drop in December, quite a bounce back, despite the squeeze from inflation.
Absolutely. Good morning, Laddie. This is really robust data that was released this morning by the ONS. I think the Chancellor will be crossing his fingers, hoping that this data reveals that the shock to the economy from Omicron was quick and short-lived. As you said, there was a 1.9% jump in retail sales in this country in January, following a pretty sizable 4% contraction in December, where most of the country was locked down due to Omicron. This data actually means that now retail sales are back to pre-pandemic levels. We haven't seen this high level since February 2020, which does seem like a long while ago. The biggest rise has actually come from online shopping. No surprises there. That jumped 8% month on month. And also home furniture. It seems like people working from home are still deciding to decorate their Zoom backgrounds. That jumped by 7.5%. But surprisingly, there was a fall in clothing sales. Now, that does mean that perhaps the cost of living is squeezing in, and consumers are thinking about, grabbing that extra pair of jeans or that office suit because of the fear of inflation, which is currently running at 5.5%.
I guess we were looking to buy ahead then. But it also interestingly shows there was also a jump in spending on fuel last month.
Yeah, absolutely. We have seen the rise in fuel in January. I believe it rose by 4.1%. I think there are no surprises there, really. As soon as restrictions started being lifted and infection rates started to climb down, people felt more comfortable going on the road. But I've got to tell you another story that is linked to travel, which is this weather warning. One of the reasons why I'm working from home today, and probably my connection may be a little bit shaky, is for the first time ever, the Met Office have released a red weather warning to London and England and the southeast. We are expecting gusts of winds for up to 80 miles per hour. They are warning of loss of life. This is expected to hit between about 10 and 1. Schools that aren't on half term are shut. British Airways have cancelled several flights. Trains are disrupted. You know, we can't talk about London and not talk about a weather situation, but this one is pretty serious and is likely to have lots of economic shocks around the square mile today.
Wow, quite serious. But Juliana, I'd say try to stay safe, and it's good you're working from home today. All right, Juliana, thank you so much, and enjoy the weekend.
Thank you, Laddie.
All right, let's take a look at other markets now. We see the crypto market had a massive pullback yesterday, also entering today. We see global markets also responding the same way. Let's look at the market cap there. We see it's lost that $2 trillion position there. It's $1.91 trillion this morning, down about 2.87%. Volume traded $85.84 billion, up 19%, basically from sell-offs in the market. We're seeing that volume rise there. We see Bitcoin dominance, 41.32%, down 0.80%. Let's look at the price of Bitcoin this morning. It lost that 44,000 mark. It failed to stay above the $43,180 support level and extended a decline. Bitcoin is traded below the 42,005 support level to enter a bearish zone there at that 40K level. A decline gained pace below the 42,000 level and the 100-hourly simple moving average. There was a break below a major bullish trend line with a support near 43,600, and the volume traded in Bitcoin, $26.87 billion traded. Price of Ethereum lost that $3,000 mark. It's failed to stay above that support. It's trading at $2,904, down 6.08%. Volume traded in Ethereum, $15.78 billion. All right, let's bring in Michael and Naji right there now. Hello, Michael. Great to have you.
Hello, everybody. Happy Friday. How are you?
Happy Friday. I'm doing great. But I see U.S. President Joe Biden is expected to issue an executive order on cryptos and central bank digital currencies. What are the expectations here?
Yeah, so basically what's going on is Biden has charged the three-letter agencies, basically a whole alphabet soup, that they have to go study the implications of digital ledger technology and the blockchain on overall what it means for America, and come back with coherent policies, some kind of framework in the next 6 to 12 months. And mainly what that entails is that he's going to direct the Treasury the State Department and the Attorney General to basically study CBDCs, basically to realize what is its geopolitical significance and what are their implications on overall like rights and laws for Americans, and also as well like he's also directing the FCOC to study the financial stability of crypto. And so basically what that entails is what risks does that provide, what risks does that entail to the overall market? Can there be like external shocks as a result of having CBDCs? And also as well, the Attorney General will also be looking at the impact on market competition. Basically, is it healthy for us to have these digital assets? Is it basically people trying to circumvent existing securities laws? And the last thing that they're looking at is they're going to direct the SEC, the CFTC, to look at market protection. Because as we know in crypto, there's just numerous amounts of people who are just there to grab money and not really try to protect the consumer. So the problem is right now you have a situation where there's just so many regulators, trying to regulate crypto. No one is, the cop on the street. There's no, regulatory framework at all. People just take stabs at what they think is under their peer view. The CFTC thinks derivatives is under its peer view. The SEC thinks securities are under its peer view, so stablecoins fall under that. So right now, a lot of these agencies are having their gridlock between who's supposed to do what. And Biden is just trying to charge them to say, hey, you guys go study this, give me back a framework. Hopefully we can take this framework that you've created to Congress and actually enact laws so we have a coherent policy going forward.
All right, I'm sure the outcome could actually cause some volatility going forward, but we see Bitcoin and Ethereum have lost key support. How are you seeing the market today?
Yeah, I think ever since December of last year, when the Fed minutes came out and it was extremely hawkish, they're cutting back bond purchasing. They're going to just start tapering. You've really seen risk assets, go downwards compared to Bitcoin. So I really think going forward until March, at least till the first rate hikes are implemented, you're going to see risk assets like Bitcoin do, really bad. Just because of they're up so much in terms of the overall ecosystem. You can see tech stocks like Palantir, Facebook, PayPal. They're basically back to their pre-pandemic levels, and so naturally one could expect the same thing of Bitcoin. We could even see a test back of 25 to 20K. So at the end of the day, one has to realize a lot of these assets were propped up because of all the money the Fed injected. And it's only smart to think that if the Fed takes away all that excess liquidity, the sponge that crypto is should, fall in tandem with that. So at the end of the day, I still believe the next 2 to 3 months will be very, bearish for Bitcoin. Expected to probably touch the 30s again. Could he hit the 20s? For sure. I think that could definitely be a card that's, could be played. But everyone, should definitely have, taken off some exposure from the table. A heavy cash balance right now isn't the worst thing to do. So that way you can protect yourself. And when you see the buy the dip opportunity that everyone's expecting when we get to 20K, that you can pounce on it. Bitcoin isn't going anywhere, but I do think the Fed policy is unprecedented. This is the latest the Fed has ever acted in the business cycle. They've never raised rates this late in the business cycle. And so if they have a 50 basis or 100 basis point jump, I really think that is very, very hawkish for Bitcoin. So I really want everyone to be careful, and having cash right now is a position. Having stable coins in your portfolio is a very strong position to have, considering the macroeconomic environment.
And Michael, I was listening to Cathie Wood yesterday, and she said the capital markets in the U.S. Bottomed in January, and that kind of gave me some hope there. But I don't know what's going to happen next.
So fundamentally, I think some stocks have bottomed out. Like a lot of stocks have, like I said, have gone below their pre-flu levels. So some stocks have bottomed out, but I still think the ones that have done spectacularly, like Tesla, that are up almost 900 to 1,000%. I still think there's a little bit more downside. But some stocks have bottomed out. So at the end of the day, there is hope on the horizon. But everyone has to be cautious for what the Fed does next month. I really do think that dictates the pace for the rest of the year.
And we'll see if there'll be a decoupling, for Bitcoin and the traditional markets like the NASDAQ, the heavy tech, heavy NASDAQ. That we'll keep watching if that actually happens. All right, Mark and Naji, thank you so much for coming on the program as always. Always good to talk to you.
Thank you, Larry. Happy Friday.
Happy Friday. All right, so that's a wrap on the crypto segment and the program today. Thank you so much for watching. Thank you for staying all the way till Friday. I'm Ladi Williams. Don't forget to join us at 1:30 p.m. on Business Incorporated for more updates and developments in the world of business. Thank you for watching. Bye-bye.